If you've spent any time in the trading world, you've likely come across statements like, strategy is everything. Find the perfect setup or follow a proven system. On the surface, these ideas seem to make sense. After all, without a clear plan, how would you know when to enter or exit a trade? How would you ever find consistency without a strategy? Every new trader begins here, chasing that elusive holy grail setup that never fails. They bounce from one method to another, buying expensive courses, trying out indicators, and downloading secret formulas that claim to guarantee success. But here's the uncomfortable truth most traders don't want to admit. Your profitability doesn't come from your strategy, it comes from your ability to stick to it when things get tough. That trait is called discipline, and it's the key difference between those who win and those who lose in this business. You could be using the most accurate system on the planet with a 90% theoretical win rate, but if you can't follow the rules under pressure, you're doomed to fail. Just think about it. How many traders begin with something simple, like a moving average crossover or a price action setup that actually works when applied consistently? There are plenty. So, why do more than 90% of traders still end up losing money? It's not because the system stopped working. It's because once fear, greed, or frustration show up, they ditch their strategy. They close winners too early, hold losers too long, or take random trades that don't align with their plan. This isn't a strategy issue. It's a discipline issue. Discipline is the boring, unglamorous side of trading that rarely gets discussed, mainly because it doesn't sell. It's not flashy. There's no secret indicator in discipline, no special algorithm, no mysterious hack to instantly grow your account. Discipline is repetitive. It's sticking to your process every single day, even when you'd rather do something else. It's following your rules with precision, even when your emotions are shouting at you to break them. It's resisting impulsive trades, walking away from revenge setups, and refusing to increase your lot size out of overconfidence after a win. The truth is, most traders already possess strategies that could generate profits, but very few have the psychological strength to execute those strategies without emotional interference. They convince themselves they need more information, more tools, more signals, when in reality, what they truly need is self-discipline. Because successful trading isn't about flawless market predictions. It's about controlling yourself when the market tries to bait you into making poor decisions. Now, imagine two traders. Trader A is equipped with a cutting-edge algorithmic system, refined over a decade, boasting incredibly accurate entry and exit signals. Trader B, on the other hand, trades a basic breakout setup that can be learned in minutes. Here's the twist. Trader A lacks discipline. The moment they suffer 2 consecutive losses, they begin adjusting their system, placing trades that weren't planned, and increasing risk out of frustration. Trader B, in contrast, sticks to their basic strategy with unwavering discipline, never deviating from the plan, no matter how they feel. So, who do you think comes out ahead in the long run? Trader B every single time. Not because their strategy is superior, but because their discipline is unbreakable. This is one of the biggest myths in trading. Many believe that success lies in complicated strategies. They assume profitability is hidden in some obscure technical setup or cutting-edge indicator. But if you look closely at the top traders across the globe, you'll see something surprising. Their strategies are usually very straightforward. Support and resistance, breakouts, trend following, supply and demand. The real complexity isn't in the system. It's in the mindset required to execute it consistently without falling apart emotionally. So why is discipline so difficult to develop? Because trading challenges your psychology in ways most people aren't prepared for. Each time you click that buy or sell button, You're battling thousands of years of human evolution. Our brains are designed to seek safety, not probability. When a trade turns against you, your natural response is to hang on and hope for recovery because closing a loss feels like defeat. When a trade is in profit, your instinct is to grab it fast, fearing it might vanish. But good trading demands the opposite, cutting losses quickly and letting winners run. That's why discipline outweighs any strategy. It's more than just rule following. It's about overcoming your natural instincts. Let me ask you something before we go further. Are you stuck battling fear, overtrading, or self-doubt? The truth is, most traders don't fail due to weak strategy. They fail because of flawed mindsets. That's why mastering your emotions is critical. If you can't control your psychology, your strategy won't matter. Now think back on your own trading experience. How many times did you have a plan for a trade, only to throw it out the window once you entered the position? You told yourself you'd only risk 2%, but after one big win, you risked 5 times more on the next setup because you felt invincible. You promised to stick to your stop loss, but when price got too close, you moved it just in case. You swore you'd never chase a loss. But one red trade later, and you were back in, trying to win it back immediately. These aren't signs of a broken system. These are signs of broken discipline. And it's not strategy that gets punished in the markets. It's poor discipline that pays the price. A disciplined trader with an average strategy can still succeed over time because they manage risk effectively, remain consistent, and avoid emotionally driven decisions. On the flip side, a trader using the most powerful strategy in existence but lacking discipline will eventually destroy their account. It's not a question of if, it's a question of when. So what does that mean for you? It means you must stop obsessing over crafting the perfect strategy. Quit believing that the next course, new mentor, or latest indicator is the missing piece. None of that matters if you lose control the moment the market goes against you. The real challenge in trading doesn't lie in the charts. It lies in your mindset. Your results depend on whether you can stay committed to your plan when it's most difficult to do so. Discipline is the cornerstone of every successful trader's journey. Without it, everything else falls apart. But with it, even a basic system can generate long-term gains. That's why discipline consistently outperforms strategy. Strategies don't betray traders. Traders abandon their strategies. Discipline goes beyond simply following a set of rules. It's about developing a mindset strong enough to navigate the relentless pressure of the market. Every tick, every candle, every indicator is testing your mental resilience. The chart doesn't care how you feel, whether you're confident or afraid, or how badly you want to be right. It just reflects reality. Your job is to respond to that reality with control and clarity. Most traders fail here. They let emotion override logic. The first step in developing discipline is understanding that trading isn't about being right. It's about executing your plan consistently in the face of uncertainty. Emotional mastery is the hidden edge that sets elite traders apart. While most beginners obsess over tools, strategies, and signals, seasoned professionals spend their energy managing themselves. Fear, greed, and hope aren't just challenges. They are active threats to your trading success. Fear creates hesitation. You spot a solid setup, but freeze, waiting for confirmation that may never come. In that moment, the opportunity passes you by because your brain is wired to avoid pain. Greed pushes you into overtrading. One win leads to several reckless trades because you want more, forgetting that each position carries real risk. Hope traps you in losing trades. You tell yourself the market will bounce back, so you hold long past your stop, but it rarely does. The market owes you nothing, yet discipline can give you everything. Most traders don't fail due to a lack of technical skill. They fail because they can't manage the basic expectations the market demands. Discipline is taking the loss when your plan tells you to, even when it hurts. It's taking profits, as planned. Even when the price looks like it might run further, it's making the right decision. Even when it feels wrong, discipline is about taking deliberate action. Day in and day out. It's about doing the work trade after trade. With consistency, you can replicate someone's strategy, but you can't copy their discipline. Discipline must be trained, refined, and strengthened through real experience. At the heart of emotional discipline lies neutrality. Being neutral doesn't mean being detached or indifferent. It means separating yourself from the outcome and focusing on the process. Neutral traders don't rush to celebrate a win, nor do they spiral after a loss. They stick to their system regardless of recent outcomes. Knowing that no individual trade defines who they are, their self-worth isn't tied to gains or losses, it's rooted in execution. This mental approach cultivates composure, helping calm traders make logical decisions while panicked traders act recklessly. Maintaining neutrality helps you see the market for what it truly is, not what you want it to be. When a trade turns red, that moment becomes a turning point, separating those who grow capital from those who wipe out accounts. Discipline enables you to follow your plan, even when it feels painful. The temptations are constant shifting stop losses, doubling down on losers, or chasing bad trades. But disciplined traders see each trade as part of a long-term process, not an emotional impulse. Building emotional discipline is gradual. It comes from practice, logging trades, reviewing mistakes, and honest reflection. The market doesn't forgive emotional errors. Every fear, greed, or frustration-driven reaction leaves a lasting mark on performance. By tracking what works and what doesn't, mistakes turn into insights. Over time, this evolution shifts trading from reactive to strategic. Emotions are anticipated and managed before they take control. Effective risk management flows from emotional control. Undisciplined traders overtrade, overleverage, or ignore position sizing. Disciplined traders know exactly how much to risk, how much to lose, and when to walk away. This avoids catastrophe and builds real confidence. Discipline also protects against revenge trading, the silent killer. After a painful loss, emotional traders force trades out of anger or desperation. But disciplined traders pause, revisit their rules, and wait patiently for the next solid setup. Another essential pillar of discipline is patience. The market is not your adversary, it's your mentor. Many traders rush into trades out of boredom, anxiety, or excitement, seeing patterns that don't exist and forcing trades outside their criteria. Discipline trains you to wait, reminding you that some of the most profitable trades are the ones you don't take. Impulsive traders often miss great setups, settle for low-quality trades, and increase risk. Patient traders stick to their rules, observe objectively, and act with precision. Patience reduces costly errors and leads to smarter entries. Discipline is also mental endurance. Markets are unpredictable. Losing streaks are normal. Traders without discipline abandon methods, jump to new systems, and let small losses spiral. Disciplined traders stay consistent, take losses, and treat setbacks as steps toward long-term gains. Resilience keeps them in the game while others burn out. Discipline is not just about avoiding failure, it's about creating consistent opportunity by managing emotions, staying committed, and approaching trades with objectivity. You build the ability to profit repeatedly. The market rewards patience and consistency far more than brilliance. Think about your own trading. How many chances did fear make you miss? How many bad trades came from greed or frustration? Every yes is not just a mistake, it's a lesson. Discipline is a mindset you refine over a lifetime. Every trade is a test of mental strength. Discipline always wins over strategy. It ensures the best trades are executed, losses controlled, and risk managed carefully. Traders with discipline outperform those with superior strategies because they handle setbacks, stick to their edge, and act without emotional noise. Without discipline, even the most advanced strategy will fail. With discipline, even a basic system can succeed. Success doesn't come from complexity or chasing the perfect system. It comes from building a routine your mind can follow with confidence and control. The path is simpler, but more difficult. Success is built through consistent, disciplined repetition. Each trade isn't about being correct. It's about executing your plan with precision, whether winning or losing. Discipline ensures you act only when setups match your strategy and step aside when they don't. Without discipline, even the best strategy crumbles under emotional pressure. The difficulty lies in human nature. Our brains chase pleasure and avoid pain. A minor loss provokes fear. A small gain sparks greed. These emotional triggers override logic, leading traders to chase wins, increase risk, and break their rules at the first sign of discomfort. Discipline creates the structure to resist impulses. It shifts focus from outcome to execution. With discipline, you move from reactive to proactive, and that shift separates consistent traders from those who struggle. One of trading's toughest realities: the market doesn't care about your trades. No setup guarantees profit. No indicator ensures success. Disciplined traders embrace uncertainty to trust their edge and detach emotionally. Every position is just one execution in a bigger process. This mental shift creates clarity. Letting go of being right allows objectivity. Disciplined traders act decisively, while undisciplined traders let ego distort decisions, causing poor judgment and heavy losses. Discipline plays a crucial role in risk management. Many lose by over-leveraging, risking too much, or ignoring stop-losses. Emotional acts, not strategy. Disciplined traders follow strict risk rules: stops, controlled size, defined exposure. Losses aren't failures, but part of the system. This disciplined approach protects capital, preserves opportunity, and supports long-term growth. No system can overcome reckless risk-taking, but with discipline, even a basic strategy becomes consistently profitable. Another cornerstone of discipline is patience. Markets move at their own pace. The best trades don't appear every hour or even every day. Undisciplined traders force trades just to feel active, but disciplined ones wait. But patience is not inactivity. It's strategic restraint, waiting for confirmation, for ideal setups, for conditions that meet all the right elements. That's the difference between smart trading and emotional gambling. Discipline trains you to hold back, observe carefully, and strike only when the time is right. Emotional resilience naturally accompanies discipline. Every trader will face losing streaks, drawdowns, and volatility. Traders without discipline panic, abandon their methods, or overtrade. Disciplined traders see each trade as part of a bigger picture. Losses are temporary. Outcomes are probabilistic, and the plan remains constant. This resilience ensures steady performance, even in rough patches. Confidence comes not from perfection, but from trusting your system and executing it consistently. Confidence rooted in action, not wishful thinking. Routine is another powerful ally in discipline. Top traders don't leave decisions to luck. They follow a structured daily schedule, pre-market prep, Entry, exit rules, sizing, and reviews. Routines instill consistency, removing emotions' grip and making discipline automatic. A major reason discipline outperforms strategy is that even the best strategy fails when misused. Two traders can use the same signals, one disciplined, one emotional. The disciplined trader grows steadily, while the other might win occasionally, but risks ruin. The market punishes inconsistency more than bad strategies. The psychological backbone of discipline enhances learning. Every trade is feedback. Disciplined traders review results, refine methods, and avoid recurring mistakes. Their process-oriented mindset nurtures mastery. Undisciplined traders chase outcomes, repeat errors, and let emotions cloud judgment. One overlooked element of discipline is managing environment, external noise news, social media, peer disrupt clarity. Undisciplined traders react impulsively, but disciplined traders filter inputs, block distractions, and focus on plan, risk, and execution. Discipline is not just self-control, it's shaping mindset through habits. Keeping a journal is a form of discipline. Recording trades promotes accountability, reveals patterns, and turns impulses into insights. Journaling reinforces discipline, cementing habits needed for long-term success. In summary, discipline is the foundation of trading success. Techniques can be duplicated, indicators mastered, and patterns studied, but only discipline guarantees reliable execution. It controls emotions, strengthens risk management, builds resilience, and turns routine into second nature. Without it, even the best strategy fails. With it, even a modest approach yields extraordinary results. Ask yourself, are you truly following your strategy consistently? Or are emotions controlling your trades? Discipline is often misunderstood as forcing yourself, suppressing temptation, or blindly obeying rules. In truth, it's a mindset, a system, and a habit in one. Discipline means acting in alignment with your plan despite fear, greed, or distraction. It structures your mind, so sound decisions become automatic and emotional impulses are neutralized. Without this, even sophisticated systems fail. The market rewards self-control more than clever forecasts. One of the biggest pitfalls is overtrading. Every trader feels tempted by headlines, chart patterns, or price spikes. Undisciplined traders treat every movement as an opportunity, leading to frequent small losses. Discipline teaches you to wait, disregard noise, and act only when your edge is present. Patience is central to discipline. Many think activity equals productivity, but seasoned traders know waiting for the perfect trade is more profitable. Patience avoids low-quality trades, limits risk, and builds confidence. Discipline transforms patience into a natural reflex. Wait, watch, act only when aligned. Risk management is inseparable from discipline. A strategy's effectiveness is only as strong as your ability to control risk. Discipline ensures proper sizing, strict stop losses, and risk limits. It guarantees no single trade wipes your account, making losses manageable and turning trading into structured practice. Emotional control is another essential component. Fear and greed are the market's most potent traps. Fear causes hesitation, exiting winners too soon, or missing setups. Greed drives over-leveraging, chasing losses, and reckless risks. Discipline buffers these impulses, letting traders treat losses as part of the game and wins as correct execution, not proof of skill. Emotional resilience grows from consistent, disciplined behavior. It reinforces calmness, focus, and rationality under pressure. Routine magnifie discipline. Pro traders build daily frameworks prep, analysis, planning, execution, review that evolve into habits. Routine reduces decision fatigue and converts discipline into an automatic system, ensuring consistency even during market chaos. Reflection is another pillar. Every trade is feedback. Undisciplined traders ignore mistakes or rationalize them away. Disciplined traders examine behavior, spot flaws, and adjust. Keeping a trade journal fosters accountability and improvement. Reflection transforms errors into insights, turning trading from trial and error into mastery. Discipline also means controlling external influences, news, social media, and opinions often trigger impulsive reactions. Undisciplined traders chase headlines, while disciplined ones filter inputs and focus only on system-aligned data. Shaping the environment reduces mental clutter and supports consistent execution. Discipline strengthens confidence independent of outcomes. Many traders tie confidence to wins, making it fragile. Disciplined traders gain confidence from execution itself. Each properly executed trade, win or loss, builds trust in process. This confidence ensures composure in drawdowns, clarity in opportunities, and faster recovery. After setbacks, discipline nurtures a long-term mindset. Trading is not isolated wins or losses, but an ongoing journey of capital preservation and growth. Undisciplined traders chase short-term gratification. Disciplined traders trust steady execution to yield exponential results. Discipline breeds patience, resilience, and strength to withstand temporary losses. Over time, two habits compound into a major edge. Discipline reframes uncertainty as opportunity. Every trade carries risk and unpredictability. Without discipline, uncertainty fuels fear and poor decisions. With discipline, uncertainty becomes manageable. You set boundaries, treat losses as part of the system, and turn chaos into structure. Discipline is not optional, it's the core of trading success. Strategy and tools provide structure, but only disciplined execution delivers consistent results. It regulates emotions, enforces risk practices, builds resilience, and turns behaviors into habits that generate profit. Discipline is the difference between gambling and professionalism. The real question, can you follow your strategy with absolute consistency? Are you trading with discipline or letting emotions lead? Discipline separates survivors from those who blow accounts. Position sizing is a critical test of discipline. Undisciplined traders risk too much on one trade. Disciplined traders define exactly how much to risk and stick to it, creating a buffer. Losses feel manageable, allowing clarity instead of panic. Stop losses are another test. Many traders avoid or move stops out of fear. Indiscipline widens or removes them. Discipline enforce exact placement, protecting accounts from large drawdowns. Stop-loss discipline is survival versus repeated failure. Routine strengthens discipline. Structured, repeatable actions, pre-market prep, setup identification, risk assessment, post-trade review, reduce decision fatigue, and make execution automatic. Repetition builds momentum and focus. Even under pressure, emotions are silent killers of trading accounts. Fear and greed distort judgment, causing hesitation and impulsive actions. Discipline is the antidote, helping traders observe impulses without reacting. Each trade is treated as one of many. Process prioritized over outcome. Reflection is a core pillar. A trade journal goes beyond recording numbers. It analyzes behavior. Undisciplined traders rationalize mistakes. Disciplined traders learn from them. Reflection transforms experience into insight, ensuring continuous improvement. Discipline extends to market selection and patience. Indiscriminate trading leads to poor setups and erratic results. Disciplined traders wait for markets and high-probability conditions that align with their edge. Even if it means sitting on the sidelines, patience conserves capital and makes each trade intentional, reinforcing confidence and reducing stress. Consistency is the ultimate product of discipline. Success isn't just about wins and losses, it's about repeated, controlled execution. Disciplined execution compounds over time. Small, consistent gains become substantial results because the process is repeatable, not reliant on prediction. External influences are another battlefield. News, social media, and peers disrupt traders. Undisciplined traders react impulsively, while disciplined ones filter noise and stay focused. Ignoring chaos is as powerful as following your plan. Discipline strengthens self-confidence independent of outcomes. Confidence based on process, not wins, makes traders resilient. Correct decisions reinforce trust in the system, enabling calm action and fast recovery from setbacks. This process-driven confidence is sustainable and scalable. Discipline teaches acceptance. Losses in a disciplined framework are feedback, not failure. Undisciplined traders react emotionally, while disciplined traders remain objective. Acceptance builds confidence. Knowing results are probabilistic, not personal. Discipline is the bridge between strategy and results. It transforms knowledge into execution and mistakes into lessons. Without discipline, traders become emotional and inconsistent. With it, execution is calculated and outcomes rule-based. Discipline is not optional. It is the foundation of long-term profitability and mastery. Trading is a marathon, not a sprint. Most fail because they chase quick money. Markets test emotional endurance. Only resilient traders survive setbacks. Emotional resilience enables clear thinking after losses, staying committed, and avoiding reckless decisions. Even the best strategy means nothing without resilience. The market will hurt you, and emotional pain is inevitable. Successful traders endure pain, question themselves, but keep moving forward. Discipline prevents revenge trading and emotional collapse. Traders lose discipline when losses trigger survival instincts, stress, fear, irrational behavior. This explains revenge trading and abandoning plans. Building resilience means controlling reactions, accepting losses as part of the process, and training calmness under pressure. The first step is detaching self-worth from results. Tying identity to wins or losses creates unnecessary pressure. A losing trade does not make you a failure, it's just a cost of doing business. Preparation is another key element of emotional resilience. Visualize different outcomes before trading to reduce emotional shock. Whether you win or lose, the goal is to stay disciplined. Risk management is essential for resilience. If a single trade can ruin your day or account, you're risking too much. Keep risk small so losses feel manageable, like a normal business expense. Professional traders don't panic because their risk is under control. Another powerful way to build resilience is a bounce-back routine. After a loss, pause before re-entering. Ask yourself, did I follow my plan? If yes, the loss is part of the process. If no, fix the mistake first. This habit prevents emotional blow-ups. Reward yourself for following your rules, not just for making money. If you only feel good when you win, you'll chase wins and break discipline. Celebrate proper execution, even on losing trades. To reinforce long-term success behavior, resilience is not about ignoring emotions, it's about mastering them. You acknowledge fear, frustration, and stress, but do not let them dictate actions. Trading will always test you with bad days. surprises, and drawdowns. Resilient traders keep going, others quit. Long-term winners are not the most accurate, they are the most emotionally durable. Ask yourself, when the next storm hits, will you stay disciplined or let emotions undo your work? At the start, discipline feels like a prison. You hold back, miss moves, and feel others are making money. But discipline is not restriction, it is protection. Your rules whisper, wait while emotions scream act. Others show off big wins online, making you doubt patience. But those traders rarely last. They don't post their losses. They disappear after blowing up. Discipline stays. It doesn't rely on luck. In the end, it wins. If you've read this far, you already know the cost of ignoring rules. You've chased trades, moved stops, and held losers too long. Each time ended, the same losses piled up. Confidence dropped. Frustration set in. On the other side, when you followed your rules, even losing trades felt controlled and calm. That's not coincidence. That's discipline giving you control in chaos. The biggest breakthrough isn't a secret strategy. It's realizing this. You can't control the market, but you can control yourself. Not charts, news, or candles, only your response. When you master your response, everything changes. You stop chasing perfection, let go of always being right, and focus on execution, process, and consistency. That mindset shift is where real success begins. Think about a casino. Do they care about one roulette spin? No. They know their edge. And they know long-term consistency wins. That's how you must think as a trader. Each trade is just one spin. Over 100 000 trades. Your edge shows up if you stick to the plan. Most traders ignore this truth. They don't fail from lack of knowledge, they fail from lack of discipline. They know what to do but don't do it. They give in to fear, greed, impatience. They move stops, over-leverage, revenge trade. Slowly, they blow up. Discipline feels hard at first because it demands sacrifice. It asks you to put long-term goals above short-term pleasure, to skip tempting trades, to take small losses rather than hold and hope, to risk less when others risk more. Over time, discipline becomes second nature. It becomes habit. It becomes who you are. And then everything changes. Rules once felt like chains, now feel like freedom. You'll watch others blow accounts while you stay calm, grateful, and consistent. Freedom in trading doesn't come from doing whatever you want. It comes from mastering yourself. So nothing the market does can shake you. Most traders never reach this. They chase quick wins, confuse excitement with progress, and get punished. Here's the real question. Do you want to be the trader who hopes for luck, or the one who builds a future through discipline? One lives in highs and lows, the other lives in control, slowly building wealth and freedom. Trading is not about one lucky trade, it's about hundreds of disciplined ones. Not about one big win, but small, consistent wins stacked over time. Discipline builds confidence, creates consistency, and eventually freedom, the kind you dreamed of. When you no longer fight your rules, but embrace them. When you feel calm instead of fear, control instead of greed. You'll understand the core truth. Discipline will always beat strategy every time. So next time you feel tempted to break your rules, remember, every undisciplined trade is a step away from freedom. Every disciplined trade is a step toward it. Which direction are you choosing? The market will always test and tempt you, but if you stay disciplined, choose process over impulse, patience over greed, you will win. And your win won't come from the perfect strategy. It will come from mastering yourself. This is the truth. No one wants to hear, but every successful trader knows. Once you master discipline, You stop chasing the market, and the market starts rewarding you. So the final question is simple. Are you ready to choose discipline and claim your freedom?